Let's also focus in on the personal finance corner, and of course Faye is right here with us, and we're focusing on debt funds today.
In fact, some very phenomenal returns given by some gilt funds. We're going to find out why, and we'll find out if we should bank on those funds going forward. Let's bring in Dhirendra Kumar, the CEO of Value Research. Dhirendra, thank you so much for joining us. Now, of all the debt funds in our market, the short-term gilt funds have been top performers, and specifically the Sundaram Gilt Fund, 19% returns over the last 1 year. Explain to us how this fund has managed to give such high returns, especially in comparison to the other funds in its category.
Don't get carried by the very impressive returns of Sundaram Gilt Fund, because one, it is not a mainstream category, and two, it is a very small fund. It's a 20 crore fund, and when June 15 happened, for a 20 crore fund to reduce its maturity and escape the big decline that happened, which has impacted all other gilt funds, this was able to survive that debacle very nicely. And apart from that, this is a very conservative fund, and gilt funds are not exposed to the credit risks, and if any rate outlook changes get reflected in a gilt fund very dramatically, very sharply, because there is a very active and large market for gilts. So, but this fund was able to, I think this fund is an outlier. Don't get carried by the numbers of Sundaram Gilt Fund, and certainly don't chase this 19% return over the past 1 year. Yes, there is a possibility that as and when not a possibility, but it has always happened that whenever the rates go down, long-term bond funds benefit, and gilt funds gilt funds show all that changes way too rapidly. And so from, if you take a view on the interest rate coming to these such funds opportunistically, this could be a nice bet for an individual investor, not otherwise.
Well, Dhirendra, if we are going to invest in gilt funds right now, how should we choose a fund? And like you said, can past performance be an indicator, or should it be an indicator at all?
Past performance may be an indicator in a sense that how nimble the fund has been. Because over the last 1.5 years, the kind of volatility we have been able to see in gilts, in debt market in general, and gilts in particular, gilt funds tend to be, the most volatile of the fixed income segment. Yes, how the fund has been able to navigate the volatility is, past track record could be useful. But don't chase these funds, don't get carried by the numbers, because it could be a one-off performance, an accident which is demonstrated in a very small asset base, which may not be true in times to come. So look at the behavior of the fund, choose a good fund with a long history, and particularly how the fund has been able to navigate volatility.
All right, we have a question, in fact, from one of our viewers. Raj has written in. He wants to invest 3 lakh rupees for a short duration of 6 months, and he wants you to give him a couple of suggestions on where he can invest this money. 6 months, obviously too short a duration to consider equity, Dhirendra, but what sort of a debt fund should he use?
Investment for 6 months, don't consider anything except, ultra short-term bond fund or liquid fund. And here my recommendations don't matter much, because the difference between a great ultra short-term fund and not so great, an average ultra short-term fund is not much.